Hello, everyone. Trust you're well and you're staying safe in these inauspicious times. My name is 𝗧𝗵𝗵𝗵𝗺𝗺, Head of Content and Strategy at Nairametrics. Welcome to the Nairametrics webinar, Investing Options for the month of May, under a broader theme of personal finance and investment opportunities. At Nairametrics, we're very passionate about financial literacy and investor advocacy. One of the most common questions we get from our followers is, what can I invest in? It's a very legit question and one we seek to answer every month going forward via this webinar and our premium newsletter. So if you are logged in, I say to you, congratulations, as you are one of the first set of followers listening live to our maiden monthly investment briefing. On this edition, we have the pleasure of having our founder and personal finance advocate, 𝗧𝗵𝗵𝗵𝗵𝗵𝗵𝗵, who needs no further introduction. Ugo will remain a permanent feature in this monthly briefing. We're also super excited to have on this webinar Yele Bademosi, the CEO and co-founder of Bundle Africa, a social payment app for cash and cryptocurrencies. He will give us a briefing on cryptocurrencies and the opportunities currently available. As part of our ground rules, only the speakers will be allowed to speak. This is to ensure everyone hears them clearly. Our speakers will also love to take on some of your questions. However, to ask questions, kindly go to the chat room section or the Q&A session to drop your questions. Our webinar team will select some of your questions for the speakers to respond to, and preference will be given for questions that address broader issues. Thank you once again for joining into the Nairametrics webinar. Over to you, 𝗧𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵𝗵
Great to be here. Good evening, everybody. Hope you're having a very safe weekend at home. Remember that we can only just contribute to this COVID-19 situation by simply staying safe and staying at home. If you must go out, make sure that it's it's an essential reason, maybe to go get groceries, or maybe fill up your car, or do anything that's pretty much essential. We know work starts tomorrow, and I'm sure we're all pumped up for work as well. But we got to be careful, and we have to stay safe and continue to stay safe. Today, I'm gonna be taking you guys through investment options for the month of May. These are basically investments that I think that you should consider doing. These are the investments that I'm also going to consider doing as well in the month of May. So I'm going to be sharing my screen in a bit so that we can all have this. You can all flow with me. Just in a second. Yes. So there you go. So this is the outline of my topic for today. We're going to be looking at investment options for May 2020, like I said earlier on. This is the outline. So we'll start with macroeconomic overview and just look at Nigeria in general. We'll look at FPI data. FPI is typically where foreign investors, or how foreign investors, how their money flows into our economy and flows out. Very, very important data that you must track. And then we'll look at the stock market. We'll look at fixed income market. We'll look at agro-tech market, and then cryptocurrency, and of course the foreign exchange market. So these are, basically the markets we're going to look at. And from here, I'll be telling you guys what my own investments options are for the month of May. All right. So on the economy itself, you all know, everybody has been tracking Brent crude prices, Brent crude oil prices. It kind of closed a little bit higher towards the end of the month after the disaster that was the first three weeks or so of April. Brent crude, it's about $26. It came in at the beginning of the month at about $30, and then of course we all know it fell, below $20. And even the Western textile, as the WTI, benchmark crude for the United States, that was the one that fell into negative territory. Bonny Light, oil price, that's Nigeria's flagship oil, $18. This is the one that we actually sell. So I actually track this number. Back then, Bonny Light used to be, tracked with the Brent crude. So whenever the government is reeling out this budget, the government would typically say Brent crude's oil price. That's what we're benchmarking on. That's because Bonny Light and Brent crude seem to always, in tandem, they are positively correlated. But it's crazy times, and now Brent crude seems to be a lot better than Bonny Light, perhaps because there's nobody out there ready to buy our oil. Inflation rate 12.26%. Oh, I expect this to go up a little bit more next month, or by the time the National Bureau of Statistics rolls out its inflation numbers this month, actually. GDP growth rate, we haven't seen first quarter GDP growth rate yet. So this is 2019, 2.27. A lot of people expect that we would see negative GDP growth rates for the first quarter of the year. We've seen, an idea of what happened in the US. US did 4-point-something%, the worst they've seen since the 2008 crisis. Europe also was the worst they've seen since the start of the European Union. So I don't expect anything different for Nigeria. External reserves, $33 billion. We've lost $5 billion January to date. It is likely that this is, probably going to go down a lot further. For now, we are at $33 billion. We hope that things can get better in the coming weeks and maybe months. But if you want to be very honest with yourself, I doubt that we're going to see anything quite different. In fact, we expect that this number will probably go down. We do know that we got money from the IMF recently, so maybe perhaps that might just give us a little bit of buffer. But it's still troubled times for us. Now, in terms of capital importation, this is the kind of money that Nigeria expects from foreign investors. It was up 42% in 2019. I don't know if it's going to be like that in this year in 2020. Now, in terms of MPR, we are 13.5%. That hasn't changed yet, and then CRR 27.5%. So we're going to run this through. So this is basically what I was just talking about. This is before and after. You can see the external reserves. It was like $42 billion, and see where we went to and see where we are now. So still a bit of a struggle for us as a country, but we have to be optimistic and hope that things would improve as we go on. So whereas foreign investors put their money in over the last few weeks, I hope you can all see this though, a little bit tiny, but so if you look at this, look at here, foreign direct investment, this is the one that government usually likes, the money that goes into, like the economy directly, and this is not the kind of money that leaves easily. So when you see your foreign direct investments go up, then it means that investors have confidence in your economy. But it's been going down for a while. We did see a little bit of an uptick in 2018 at $1 billion, but you can see it went down to under $1 billion in 2019, and I expect that this will fall probably lower in 2020. Portfolio investments, this is the one that goes directly into equities market, that's the stock market, and the fixed income market, which is bond and money market instruments. Foreign investors love portfolio investments. You know why? Because when they get their money in, they can always get it out as quickly as possible. So in 2018, it was $11 billion, and you can see there was an uptick in 2019 to $16 billion. And then you see equities, interestingly, equities, which of course this is the money that goes to the stock market, it kind of went down from $2.3 billion to $1.8 billion. And that's probably because investors weren't really confident or comfortable with the Nigerian stock market. You can see where the flight happened here. It started going down, from here. And then the bonds market as well, we saw a little bit of rise. A lot of them moved their money to the bond markets because, bond yields were probably high for them. So they moved their money here, even though towards the end of the year, they started moving out. And then money markets as well, you also saw foreign investor put some money in here, even though it kind of went down towards the end of the year. But you can see the beginning of the year, $5.8 billion, $3.5 billion. It was pretty much high. So it's important that you track this number because our equities and money markets, typically sort of follow what foreign investors are doing. And if foreign investors' money is coming into the economy, then you start to see an uptick in this. You start to see movement here, and then you start to see increase in asset prices. So, that's why people say buy the dip. Buy the dip basically is that if you buy when it's low, by the time foreign investors are coming in, you can now sell to them, at a higher price, and then you can make some nice profits. So what do you think? What do I think should be in your portfolio in May 2020? Stock market, I think that you should be in the stock market, and then money market as well. Forex, I think, should be in the forex market. Cryptocurrency as well. Not something that I used to be very happy with, but I think that this is becoming a very, very, very critical investment that should be part of your portfolio. And then agro-tech, this one too, I wasn't very comfortable with, but I've seen some good stuff happening here as well. So I did include some agro-tech investments for you to probably explore for the month of May. So we're going to go straight into the stock market. So stock market, how stock market performed this year? Look at the all share index. This is how stocks, this is the index that measures all stocks in the Nigerian stock exchange, 8% up. For the month. Of course, it's just 1 month and a quarter, so you probably see the same thing here and here on this column as well, 8%. But year to date, we are still down though, 14%. Of course, you can understand that. That's because of what's been happening, COVID-19, crash in oil prices. So, I mean, you expect stock market to be down, so it's still down 14%. But look at the top 30 stocks, 9% up, still down compared to the broader index. And then the CNG index, 13%. But I want to take it down to the banking index. See this? 15% up, right? So a lot of banks made some money. So for those who bought the dip, that buying the dip means that you probably invested when stocks were pretty down. A lot of them got very good returns at 15%. Still down against the broader index. You can see 23.9% compared to 14%. And then if you go down to the consumer goods index, 14% as well. So they did quite well during the month of April. Still down compared to the broader index, 37% compared to 14%. The interesting thing, when it's down like this, some people believe that here probably means that there's an upside because, the consumer goods index is still down. And even though you've seen this kind of pick up here, it means that there's still an upside for you. So perhaps maybe there's an opportunity for some people, to kind of invest. And then, the stock market basically has been largely driven by local investors. Foreign investors haven't actually been around. So we've seen a lot of local investors do invest. And as well, it's also because a lot of money has left the fixed income funds as well. A lot of fixed income funds have basically matured in the month of April. And so, when these things mature, people are saying, look, where am I going to put my money into? So a lot of guys are saying, oh, no way to put my money into. Let me just put my money in the stock market, and see if I can just make some nice profit and probably get out. Let's also remember that a lot of guys went in the stock market just because they wanted to get dividend, right? So you can see this particular index here. This is I think it's the Afri Invest dividend yield. You can see they did 12.13% here. And that's because a lot of people moved into, dividend stocks. And dividend stocks are actually quite good stocks to buy. You can see they're actually doing a lot more better than the broader all-share index. I know some of you are not very comfortable with the stock market. I know. I feel that way as well. But whether you like it or not, stock market is still one of those indexes that are, it's still one of those markets that make quite some money for people. So let's go a little bit more into, stock markets that I selected, stocks that I selected for you. I selected about 20 stocks that have done very well for the month of April compared to March. I mean, just take a look at the cross section of the stocks. Imagine if you had bought into Dangote Sugar at 9 Naira, you'd be cleaning out with 38% by now. If you're selling, you want to go down to Zenith Bank. Zenith was 11 Naira 7 kobo. Some of us were screaming like, my God, this is super cheap. I mean, like, I've never seen Zenith this cheap before, though, at 11 Naira. It was one of the cheapest, especially when you compare it to its earnings. Remember, a stock is not cheap because the price is 1 Naira or 2 Naira. A stock is cheap or expensive relative to its earnings per share. Its earnings per share is how much money the company is making per share. So the profit after tax of that company divided by all its outstanding shares. That's the earnings per share. So if you want to know whether a stock is expensive, you want to compare and the share price and earnings per share. So never seen Zenith that low in a long time. Look at Nigerian breweries. They came out with dismal results though, but 21% up. Look at WAPCO, 25% up. I mean, every single stock here, did double digits. Even Owando, that some of us were afraid of. I remember I tweeted about Owando early in March. I had a friend who put about $1 million in it, and he cleaned out nicely within 2 weeks. He was out with almost 20% there pop on a window. I mean, like, it's not all roses, guys. You want to look at this side as well. Look at their year-to-date numbers. Year-to-date numbers, yeah, a lot of these stocks are still in negative territory, which means that between January and now, they've lost so much. So there's a lot of grounds for them to recover. And what that means is perhaps there's an opportunity for us to make some money. So this basically are stocks in our own universe, stocks that we track. They're like 200 stocks in Nigerian Stock Exchange, and I won't lie to you, about half, if not more of them, or if not more than that, are not worth your salt. Like, don't even bother with them. You want to track the ones that you know are liquid, so that when you put your money in there, you can put your money out, take your money out as well. You want to track stocks that have good financials, that have good corporate governance, because then you know that can, to an extent, limit the kind of risk that you carry. So only 2 stocks switched to year-to-date gains this year. Let's see what I think. One of them is MTN. Yes, MTN did year-to-date gains, and then Livestock Feeds, interestingly, switched to 30% year-to-date gains. Incredible. Livestock Feed is owned by UAC, so they did pretty well. They've done pretty well this year so far. And then, of course, like I said earlier, the rest are still in negative territory. So there are also stocks that we kind of consider COVID-19 proof. Kind of funny, right? Yeah, but I mean, these stocks you're seeing here are stocks that we kind of think, like we've always said, during this COVID-19 era, there are always going to be companies that will benefit from all this, not because, they're not, they don't care, or they don't have any concern about what's going on, but just because of the nature of the business that they do. And of course, healthcare stocks, you expect healthcare stocks to do very well, not just in Nigeria, globally as well, because a lot of people are a lot more health conscious because of, COVID-19. And so you can see healthcare stocks doing quite well. Look at me and Baker. This is actually 39%. I'm sorry, I didn't put it in the percentage, just about 39, percent pop, for them year to date, month to date, 26%. Look at Nimet as well. Look at Glasgow, GSK. This is actually 21%, not 0.2, 21% pop. And then consumer goods stocks, Nestle, Cadbury, they've also done pretty well. So, these stocks are kind of like immune, and I guess the market believes that, look, these guys, so long as we continue to be in this COVID-19 situation, people are going to be a lot more health conscious. So people are always going to buy, always going to patronize healthcare industries, and even industries that are into food supply, because people are always going to eat so long as they're home. So they kind of believe that these are like COVID-19 proof. All right. So let's move up to the stocks on our radar. So anytime I tell you stocks on our radar, it basically means these are stocks that I am recommending. And I'm recommending it not because I'm just trying to like mess around. I'm recommending it because these are the stocks that I also want to buy. So if you're one of those guys that have been tweeting at me and saying, Dre, what stock can I buy? These are the stocks that I am picking, right? These are the stocks that I'm picking. And I've got my reasons why. I mean, I'm not going to go into all that. We're going to start a newsletter very soon. And in my newsletter, I'm going to break down why I'm selecting either of the stocks. Of course, my stock selection is basically based on fundamentals. Fundamentals means that I look at the results of the company. I look at the prospects of the company. I look at how much revenue they can make this year, how much profits I think they can make. So I do a lot of all those projections. And now I basically now discount their cash flow and come up with what I think is an ideal valuation for the stocks. So I've done for these other ones. I mean, these are the ones that I've really worked hard on over the last few weeks. And I think Zenith is a good stock to own. Zenith closed at about 14.70 Naira. I think that I would selfishly and greedily like to enter at 14 Naira. If I can exit at 19 Naira, oh my God, oh well and good. So that's like a 35.7% pop for me if I do that. So I'm tracking this as well. Stanbic IBTC, I kind of missed this one when it was 24. I bite myself. I was trying to buy it at 23. I was like, oh my God, why didn't I just buy it? Because Stanbic was 23, 24% at some point in time. It's 28.5%, 28.5 Naira, sorry, right now. And I can enter at 26, hopefully. Why do you think why do I think it's not going to keep going higher? Well, I kind of feel like there's always going to be that period where, there's going to be a sell-off again. I think that is probably going to happen sometime in May if, my prediction works out well or my forecast works out well.
then I get into Stanbic at 26 naira, and then I can wait and exit at 35 naira. So my waiting period is like 3 months. I feel like within 3 months, Stanbic hits 35 naira, then I'm up 34.6%. That's not a bad deal, right? GT Bank, current price 21.1 naira. I did scoop up some GT Bank at 18. I think it even dropped to about 17 naira. I scooped up some as well. This is one stock that I can't get tired of buying. You'd probably always see it in my portfolio so long as it is under my preferred entry price. So I think I can get into GTB at 18 bucks and then exit at 25 naira. GT Bank, I mean, need no explanation. They did put out their result recently, and it was robust, it was profitable. They did better than they did same period last quarter. There's a little bit of risk around GTB. GTB has a lot of oil and gas sector loans, so there's this fear that if all these loans crystallize, it might hit GT Bank pretty bad. But if you know this bank very well, they're very good at going after their debtors. GT Bank also claimed that they did have some oil and gas hedges, which means that they had hedged oil and gas prices, so they probably might not be too affected by the crash in oil prices. But I mean, we won't know till we see their Q2 results. Q2 results won't be out till about July. So between now and then, we'll probably be here getting a lot of information from the bank to know how well they're doing. Likewise, Stanbic and Zenith as well. Stanbic and Zenith also kind of suggest that they hedged oil and gas, their oil and gas exposure. There's an article on Nairametrics on these three banks and other banks as well that kind of hedged, oil and gas exposure. So if you want a lot more information, you can head on to Nairametrics and then check those banks. And then Nestle is another one that we kind of like. Nestle, this one, I was just being greedy. There's this WhatsApp group and when Nestle was like under 800 bucks, they were telling me to buy Nestle, and I was saying nope. I thought it was going to hit 700. You know why? I'm not being stupid, but you see, I've got this valuation table, and on my valuation table, I actually think Nestle is highly overvalued. I mean, like, that's what I think, and I'll be explaining how I value stocks, in my subsequent newsletters. So if you subscribe to my newsletters, you will see how I value stocks. And so when I value stocks, I put, this margin of safety there, huge one, because you know how Nigerian things can be now. But I just didn't think, Nestle was going to be valued at less than, at higher than, 750. But, but if you think about it though, like, so it's one thing for you to, to think how, to decide or to determine how stocks are valued. But you also have to ask yourself, who are the people that typically buy Nestle? And how do they value Nestle? That's a very, very important thing that you always got to do. And foreign investors are the ones who value Nestle, who buy Nestle a lot. And they have a different metric for valuing Nestle. Most times, they compare Nestle Nigeria's price earnings ratio with Nestle South Africa and other Nestle stocks in emerging markets. And typically, I don't know, for some reason, over the last 5 years, Nestle has always been between 1,200 naira and 1,400 naira. Even when things were very bad for them in 2016, 17, Nestle still held sway. So I'm thinking if I can get Nestle at 850, don't laugh at me. I mean, like, I'm hoping that I can get Nestle at 850. If I get it at 850, that will be my preferred entry price. Doesn't mean I can do a little bit higher, but this is just my preferred entry price. If I can exit at 1,000, that's 17.6% for me. It's still higher than inflation rate. Come on, in just 2 months. Is this possible? I don't know, but I mean, like, Nestle is one of those stocks that are, COVID-19 proof. I mean, like, we're always going to buy Nestle products, right? You're always going to buy it. So, I think that they're going to be resilient. Nestle is much better than it was 3 or 4 years ago because, they've kind of fixed their balance sheet. They're a lot stronger now, not owing as much as, they used to owe before. And then, their dollar exposures are kind of limited right now. And I think Nestle learned their lesson a lot. And one good thing Nestle did as well is that, they kind of like, hedged their cost exposure. So right now, a lot of their cost inputs are also locally sourced. So they're not exposed to all this devaluation stuff that some companies are into. So I'm going to go for Nestle. This could actually be higher. I mean, like, if I decide to be just a little bit greedy, you know what I mean? I could just go for like 1,200. Yeah, I don't know, but it all depends on what the market is telling me. But my minimum, exit here is 17.6%. I'm sure you'd be wondering, what's this small stock doing here? Occasionally, I'm going to be adding a little bit of all these penny stocks. These guys really know how to move if they want to move. But I kind of like this company, Africa Prudentials. I know the CEO and I speak to him quite often, and I kind of like their trajectory. I like what they're trying to do, currently, and it's kind of impressive. the way they are diversifying. In a way, it's also a little bit recession proof, because they've kind of showed that they can actually continue to deliver good products, even though, we're in a recession. If you don't know what Africa Prudential does, they used to be a registrar, business where they help all companies. They help you and I. So if you buy stocks in a company, they are the ones who keep your records. They determine who they have records of who needs to be paid dividend. They have records of who owns what shares or not. So it's a good business. And over the years, they've kind of like moved digital. They sort of, basically pivot their business into digital products. So they now go beyond just the registrar business and offer a lot more, kind of businesses as well. And then a lot of the dividend money they hold, they also invest that and make some money off it. So I think that's a cheap stock at 3.45 Naira. 4 Naira exit is actually quite, bearish, but I'll take that, due to the risk that I have. So 16% is what I'm looking at here. MTN hit 19 Naira. And I mean, something very stupid happened. So I thought that I bought MTN stock. I mean, I was pretty much sure when it was $90. So I clicked, like buy. And then guess what? I forgot that the stockbroking, the online stockbroking platform that I use always asks for confirm again. I'm like, why? Why do you always have to ask me to confirm 2, 3, 4 times? Like, I thought that I already bought it. Only for me to come back in the evening. I was waiting for my text message a lot to see that I bought the stock. And I realized that I didn't actually buy it. And then I was like waiting, thinking that I was going to drop back to 19 Naira. No way. It just kept going up. And now it's 107 Naira. I'm kind of like hoping that it's going to drop again. So if it falls to 95 Naira, I'm out. I'm in, rather. I'm going to pick it up, exit at 110 Naira, and that's like 15.8% pop for me. So these are the stocks on my radar, right? These are the stocks I'm hoping I'm going to put in my portfolio. I already have some of them in my portfolio already, but I think I'm going to add a few more, and then increase my stakes in some of these stocks. So if you've got questions around the stocks on my radar, drop your questions in there, and I'm sure I'm going to take some of them as well. So money market, I'm going to move a little bit faster. I can hear my guys already buzzing me, telling me I got to move faster. So Eurobond yields, Eurobonds are basically, you putting your money in, putting your dollars, investing your dollars in Nigerian dollar bonds. It's not a bad investment to want to own. But it's not for the small boys. But interestingly, look at the yields here. Like, Eurobond yields are not bad. If you're getting this kind of yields on dollar investment, is really not bad. I got this table from Nairametrics, so it might be different from, if you have other places where you get your own yields from. But this is Nairametrics. Not that bad. I've actually seen some tables with about 15% yield. So that's just incredible return if you've got dollar. I'm going to take you guys later. There's a slide down the line where I showed Eurobond mutual funds that I recommend. Why am I saying that? Sometimes you really won't have the cash to actually buy dollars directly in the market. It's not for anybody. In some cases you probably need to have about $200,000. I'm telling you, it's not cheap at all. So that's the kind of money that you're looking for. But if you have $1,000, $2,000, $5,000, and you just don't want to keep that money in your dorm account, you want it to earn for you, then you got to go into a dollar mutual fund. And I have a few here that I kind of like, and I'm going to recommend that maybe we go into some of these ones. These are FGN bonds as well. They're not bad. You probably also need to go through a mutual fund to get FGN bonds. There's this website. It's a Nairametrics partner. They are called 𝗲𝗚𝗺𝗺𝗺. They launched recently that you can actually buy bonds through their platform with just 100K. So I haven't tried it yet before, but I saw it on their Twitter handle today. So maybe you might want to check them out and see if their yields are good enough for you. But these are the kind of yields that I'm seeing. But typically though, FGN bonds usually give you yields of around maybe 7-8% to 12-13% if you're pretty lucky to see one. So, and they're not bad especially if you want to diversify your portfolio. I always say that a lot. Don't put all your eggs in one basket. So you want to have a little bit of everything so that at any point in time you don't lose too much, even though you might not gain too much, but at least you hope that net you're positive. Corporate bonds. So these are companies that also issue bonds, and there's some very good companies that are like blue chip companies that you have here. This is Fidelity Bank, ETI, Access Bank, UBA, and Seplat. These guys now. Seplat actually took a very, very huge heat in recent weeks. at one point in time, their yields were not of 14-15%, and that's because a lot of investors were very worried, and then they started selling 𝗓𝗏𝗺𝗔 bonds, so that's why the yields were kind of like this. But if you're looking to buy corporate bonds, you might want to look into this area. Like I said earlier, I'm not sure you can just buy directly. You might still need to go through. I still have time. Oh, okay. All right. So you might want to go through your broker as well. Now, Agro-tech. I never used to look in this direction before, but we've done a bit of our own research on Nairametrics, and we visited some of them, and I mean, like, we kind of think that okay, maybe there's something in here for you. If you're just seeing this for the first time, these are tech-based businesses or companies that crowdsource money to invest in farms. So they get money from a lot of people and then invest them in farms. Using technology. They are not currently regulated. So what it means is that if you lose your money, there's probably nobody that you can run to. So you're basically just investing because maybe you trust the platform, and I mean, you trust that they will give you return on your money. But the SEC recently just released guidelines for regulating crowdsourcing schemes like this, not just Agro-tech, anybody that's into crowdsourcing. SEC just released it, and I'm hearing that they need a minimum about $100 million or they're about 100 million naira, sorry, if they are going to continue to operate. I don't know how many of them have that kind of money, but it means that they probably need to raise that kind of. But I mean, we like this. It's good. It's good that we have SEC coming in here and trying to regulate stuff. So at least it gives us a little bit of comfort. But so these are the ones that that on our radar. These are the 6 that we track. So 𝗓𝗶𝗶𝗵𝗵𝗁, I'm sure you guys know 𝗓𝗶𝗶𝗵𝗵𝗁 is one of the very first of the agri-tech companies that came out. They're going for, so they currently have these 2 on their website right now. If you hit their website, you probably see these 2. That is if you haven't been sold, but when I checked it last, it was still there. Fresh produce is going for 14% return in 6 months. So this is your kind of thing that maybe you want to go in this direction. Beef processing and trading, 12% return in 5 months. 𝗧𝗵𝗲𝗵𝗺, that's another good one. They do a lot variety of farm products. There's no deal at the moment. I didn't see any deal, on their website. EZ Farming, they have this one, crop-based maize farm. That says 18 to 60% returns at harvest. This one, like, man, the returns is just astronomical. So, the thing with me is that when I see big returns like this, I always fear. So I don't know, man, like, but 18 to 60%. That's what they said. Of course, do your due diligence when you're getting here. You want to be sure that they can actually give you this kind of return. FarmCart is also another on our radar, but they don't have any deal at the moment. Farm Founder, they have 2 deals. Integrated rice mill, they claim 80% return in 24 months. That's about 40% per year. So I don't know, man, 80% return, geez. And you need a minimum of 100K to invest here. The second one, a rice farm, 24% return in 8 months, with 20K minimum investment. So if you're one of those guys who just have 20K, just want to try this thing out, I was like, okay, maybe I just try it. Then maybe you want to try farm funded. And then 𝗓𝗶𝗶𝗵𝗺 Agro, they don't have any deal at the moment. Please, Nairametrics has no affiliations with these guys. We've not spoken to them. They've not spoken to us. This is just purely our own independent assessments. I'm not sure I'm going to make any of these moves, even though my guys are looking at, 𝗓𝗏𝗺𝗺 and 𝗓𝗵𝗵𝗵𝗵. These are the 2 that perhaps we might look at in the near future. I personally might just go for 𝗓𝗏𝗺𝗺. I personally, let's just blood in my hands in there and see how it goes. I mean, especially this 5 months one. It's just 5 months, isn't it? Let's just see how it goes. And agriculture as well seems to maybe be getting a boost with this COVID-19. So it's one of these COVID-19 proof stocks, I hope, even though you gotta be you gotta be afraid of this distribution of farm produce across the country with all these statewide lockdowns. Exchange rates, oh my God, I have no time. I have to move faster. Exchange rates, you can see. So if you were one of those guys that, maybe like diversified your portfolio early and bought dollars at this price, you are damn lucky. See where it is now. It's not that good anymore, because the parallel market is basically devaluing. But you know what happened now is because the CBN decided we ain't going to sell dollars anymore. So of course we were scrambling for dollars, and speculations came in, and then you can see the naira devaluing. And then going like it's just depreciating all the way up to as high as 450. I think at some point 460 during the week. But the CBN did announce that it's going to sell dollars. It's going to start selling dollars again during the week, from tomorrow, I guess. Maybe this curve might just go down a little bit. But what I would advise is that if you can buy dollars, if you have any legitimate way of buying your dollars, I think you should keep some of your money in dollars. It's very, very important. I don't know forex trading, so don't ask me questions about forex trading. But I think that is something that you might just want to look into, just so that you can keep your portfolio sort of well balanced. You don't want your money being eaten up by Nigeria. In fact, Nigeria is just one food. Our naira is just so funny. Like the same 360,000 naira that used to be worth $1,000 just a month ago, all of a sudden it's what, about $850 or thereabout. So I mean, that's how it is. Dollar mutual funds, remember I talked about this, so these are the ones that I'm recommending if you want to try it. FGNH, minimum of 2.5k. I don't know if they've changed yet, because I know some of them did try to increase the minimum amount that you need. I know Stanbic did. I think Stanbic used to be $5,000, but Stanbic increased theirs to minimum $20,000. So if you don't have $20,000, they will not accept your money for their dollar fund. That's if you want to invest in dollars. But you might want to try FBNH. I think FCMB as well. Oh, they're not on this list. I think they also have a dollar mutual fund that is about $5,000. They're about Quadros Capital, $500. I don't know if they still accept this. And Afri Invest as well. $10,000 minimum, and then Meristem MDIP. This was the one I was going to do, recently. $2,000 minimum, but they offer like 5% interest rate. So if you want to do this, if you want to invest your dollars in any of these mutual funds, and because you can't access the main funds, then maybe this is the one that you want to try. All right, so I think that I have come to the end of my own session, and I'm going to defer. Thank you very much. I hope you guys enjoyed my presentation. I will be seeing you on the other side, just to do a little bit of to take your questions. So over to you, Tyro.
Thank you so much, Ugodre. And now we have Yele Bademosi going to speak on cryptocurrency, as you can see on the slide.
Hi everyone, can you hear me? So I actually prepared a little presentation. I don't know if Ugo wants to stop sharing his screen. Okay. Thanks, Ugo. Okay. I hope everyone can hear me. So I'm just going to walk very briefly through why everyone should consider crypto as a potential asset to be in your investment portfolio. So as you can see on this slide, this is from CNN Business. It says the best investment of the decade turned $1 into $90,000. And so you're wondering, what do you think that investment was? And that investment is Bitcoin. Bitcoin over the last 10 years, and this particular chart sort of shows Bitcoin in USD against various assets, including oil, gold, and sort of like, a variety of indexes. Now, one thing this presentation is not about is trying to hype up Bitcoin. The truth is that Bitcoin and other crypto assets are highly speculative, and they sort of have maximum drawdowns. And apart from Bitcoin, there's a lot of other assets as well. So this website is called CoinMarketCap, and you could see that there are currently 5,400 cryptocurrencies with a combined market cap of over $250 billion. And the trading volumes are huge as well. You're seeing 160 billion being traded. And this just shows you some of the top assets that you can potentially trade. And so most people are usually like, where do they get started? Because this is, is a whole different world. And unlike most other asset types, crypto assets are very new, and for the most part, they're unregulated. And so my advice for most people is to sort of take things easy and start small. And unlike other assets like stocks, you could buy as little as 500 Naira. And so the first thing is, forget sort of like the earlier slides where I showed you 5,000 assets. The first one that I should think about is Bitcoin. And so what is Bitcoin? Bitcoin is a digital currency. And what that means is it doesn't have a physical representation like cash or gold. Explaining how Bitcoin derives its value and price is beyond the scope of this particular presentation, but maybe I would work with the Nairametrics team to sort of explain some of the core basics about Bitcoin. But if you look at the last 10 years, Bitcoin has done really, really well. So Bitcoin has been around for about 10 years. And every single year, apart from 2019, Bitcoin outperformed the NASDAQ pretty much quite significantly. So in the early days, it was, you're seeing sort of 1,000% returns, which I think is very difficult to see these days. And usually is ranging around sort of like anything from 30 to about 100% year on year. And, this sort of shows you the year-to-date performances for crypto assets. And so if you look at sort of on the right side, you're looking at sort of the year-to-date performances for the top, 10 to 15 cryptocurrencies. You could see Bitcoin is up 16%, Ethereum is up 48%, Tezos is up 100%. And if you look at it on just in terms of like the last 30 days or in the last month, Bitcoin moved 30%, Ethereum moved 45%, and majority of these assets moved as high as a minimum of 15%. This particular one is Tether, and I will circle back on Tether. But Tether is basically a stable coin, or cryptocurrency that is pegged to the value of $1 USD. And so the question for you to think about cryptocurrencies, or what I'm trying to explain here is, why should you include Bitcoin and other crypto assets into your portfolio? So this is sort of like looking at the last 4 years, and I stopped at 2018 because 2018 was kind of like the peak or one of the largest bull runs for crypto, and it's actually sort of like recovered beyond this point. But I wanted to include the downturn as well, so that, again, like I said, I want people to understand that this asset class is quite risky, and you want to sort of invest a minimum amount. And so this is, a 60-40 portfolio, traditional. Unfortunately, I couldn't get the data for the Nigerian or sort of like the Nigerian stock market, but this is Vanguard VT for stocks, and then 40% for bonds. And you can see over a 4-year period, we're seeing sort of like a 28% overall return. Now, what happens when you decide, if you had $100, I'm going to buy 5% worth of Bitcoin, and then pretty much hold that for a particular period. And you can see this outperforms the only traditional portfolio. You can see the returns here about 70%. Now, the biggest problem is it went as high as 140% and then it dropped. So what should you do if you don't want to experience these types of negative drawdown? And this is the importance of rebalancing. The idea for rebalancing is there are 2 ways to do this. One is time-based, wherein you decide that every month or every quarter or biannually or once a year, I'm going to rebalance my portfolio to maintain a particular amount that I want to hit. Or you can do another version called tolerance-based rebalancing, wherein you set, minimum or maximum value. So if you invested $5 out of $100, and the price of your Bitcoin in your portfolio is now worth $15, you then rebalance back to, the median range. And so it depends on sort of like your preference. And what I did was to sort of like use both strategies to see how they impact the overall returns of your portfolio. And so, again, as you can see, this is the portfolio whereby you don't do any rebalancing. And again, it goes as high, but it then suffers these losses. And this is a quarterly rebalancing portfolio. And you can see that is a lot more smoother. And I don't know how many people are familiar with terms like a Sharpe ratio, but this is probably what you want You don't really want to have an investment portfolio that goes as high as 140%, then to lose, up to 50% in terms of like drawdowns. And so rebalancing kind of like smooths out the craziness of crypto assets. And you can see sort of like a nice edge return in there. Then the other strategy as well is tolerance-based, which is almost even better as well, because you can see that, there are very little drawdowns, and you're seeing about 55% return on the overall portfolio versus, the traditional portfolio that has about 26% return. And so the importance of this graph is to show you that this is just if you added 5% in your, if you allocated 5% of your total or of your overall investment portfolio into a crypto asset like Bitcoin. And so the next question then becomes, how much should you allocate? And to me, it's a function of risk appetite, right? So if you look at this graph again, you could see the traditional portfolio in green. If you add 1%, so if you had $100 as your total portfolio value, and you added 1%, you can see that there's a increase in the overall returns, and then you increase it to 5%, and you see again a significant increase from about, this is putting this at maybe 18%, going up to about 33%, and if you go as high as 10%, then your overall portfolio returns are getting closer to 50. Now, I think, again, it's up to you to decide how much you want to add. But again, this graph just shows you that the more of these cryptos that you allocate to your portfolio, then the potential, the higher potential upside with sort of like minimal drawdowns. And so this is the summary, right? It just shows you sort of like how much Bitcoin is enough. So a traditional portfolio over a 4-year period returned 26.53%. That's if you do 60-40 split between stocks and bonds using the US-based market. 1% for Bitcoin would return 31%, 5% would be about 50%, and then 10% allocation for Bitcoin returns 78%. Again, you can see the monthly volatility, 6.5% is lowest for traditional portfolio. And even when you add just 1%, you can see that it still sort of like mirrors, the volatility that you get in a traditional portfolio. But again, when you add that 10%, you look at your Sharpe ratio and it's 1.75. That is really, really good. And I think the most important stuff to look at here is sort of like this up capture and down capture, which is saying, the up capture for 10% is 1.37. And then here is 0.61. That's almost 2 times. Then the down capture, 0.71, and then 0.66. The difference is just 0.1. And when you look at the maximum drawdown, it's 12.11% versus 11.37%. So for me, this graph is the most important thing when I'm trying to explain, just from a quantitative perspective, why I believe every Nigerian and every African should allocate some amount of crypto into their overall portfolio. And so for some people who might still be thinking that, I still don't know much about crypto, I'm not ready to sort of like even allocate 1%. Well, there's a new crypto asset. It's called a stablecoin. And this little graph, or this little sort of like graphic kind of illustrates it. The basic idea of a stable coin is very similar to mobile money. You don't have mobile money in Nigeria yet, but in Kenya, the most popular version is M-Pesa. And what happens is an individual takes cash, gives it to an agent who deposits that cash in a bank, and then the telco then issues them the equivalent of that money and that money is sort of tied to their phone number, and it can move money over sort of like the cellular or telco network. In stable coins, the idea is very simple. It's very similar. An individual deposits money into a custodian bank, usually regulated by the NYDFS. So that's the New York Department for Financial Services. And then a corresponding token is issued, and that token is then on the blockchain. And what is unique about this versus mobile money is like mobile money, there is no interoperability between various telco networks. So it's very difficult to send money from MTN to, let's say, Airtel, and Airtel to Tigo. In Kenya, that's fine because Safaricom takes about 70% of the overall market share. But in a country like Nigeria, where we have like a very diversified telco base, with people having multiple cellular lines, it becomes very difficult. And so stablecoins kind of like solves that problem of interoperability regardless of what particular network you're in. And so I personally believe that stablecoins might be the new gateway asset for cryptocurrencies. And one of the, this graph on the right here shows the news coverage on a weekly basis for stablecoins. And you can see up until sort of like 2018 or just towards the end, till end of 2017, that was when people started talking about stablecoins. And now it's like, skyrocketing. Facebook is launching a stablecoin. In China, there are rumors about a stablecoin as well. And then BUSD is one that Binance, the company I was previously director at. So Binance is the world's largest digital currency exchange. With I think last month they did about $12 billion in trading volume in a single day. And they issued a stable coin called BUSD with Paxos. And this is a fully regulated stable coin, which means that anyone who has money and has access to a crypto exchange can buy USD anywhere in the world. And so the question for you guys is like, where do you get started? Like, how do you get started? And so before I show you sort of like where you could go to sort of, maybe buy yourself, your first 500 Naira worth of Bitcoin, or maybe you want to convert 5,000 Naira into a USD stable coin, I want to focus on the important takeaways. The first thing is that without a shadow of a doubt, crypto assets should be in your investment portfolio, even if it's 1%. The second thing that is most important is that crypto assets like Bitcoin are risky assets, right? So think of them as digital commodities. Now, in the last 10 years, I've never seen Bitcoin go to zero, but we've seen sort of like oil prices during the impact of like COVID sort of like go as low as going to negative prices. And so the most important thing as anyone gets into this space is that you need to do your own research, right? So yes, there will be people who are reputable in the space, but always do your own research. And I think secondly to that is be very wary of get rich quick schemes, right? And unrealistic guaranteed returns. Something that you'll never hear from me or anyone who's sort of like, trying to do right by the space is guaranteeing people, returns on allocating some amount into crypto assets. And so what I recommend for people is to start small, right? Buy 500 Naira, buy 1,000 Naira, buy 2,000 Naira, but buy regularly, right? And this particular concept is not new. In the stock market, it's called dollar cost average. And I think like this 6 points or these 5 points are the most important things for anyone getting into crypto. And so the next question is, where can you buy crypto? So I recently launched a company called Bundle Africa. And as you can see from the interface, we did our best to make this ridiculously simple. In about 3 steps, you can deposit Naira. You click on the asset you want to buy. For now, we support Bitcoin, Ethereum, and BNB. And you click buy, and you put your buy order, which happens immediately, and you have your assets in your wallet. For now, we're only on the Google Play Store. You can go to the website, it's www.bundle.africa, or you can search Bundle Africa as one word in Google Play Store. iOS is coming out in 3 to 4 weeks, and we currently support Bitcoin, Ethereum, and BNB. And BUSD, the stablecoin I talked about, should be launched in the next 1 or 2 weeks. And that's the end of my presentation. I'll pass the mic back to Adetayo or Ugodre for some Q&A. Thank you, guys.
All right. I think I'll just take it up from here. Thank you so much, for that, Yele, for that incredible analysis. I'm just gonna take you guys a little bit to, take you back to my presentation. I hope I got the right one here. Let's see. Yes, so this is back to my presentation. So, just to give you a little bit of, an idea of how Bitcoins or cryptocurrencies have done, in the last 1 month, you can see here, 33.65% up, Ethereum 52% up. Then you can see them, and there are some that haven't done that well, but by and large, they've all gone positive. And this is from Coinbase, so you can just go to coinbase.com and also see where we got these figures from. Interesting thing is that just like Yele had said, cryptocurrency just has a way of just immuning itself from coronavirus or even global economic downturn. They did have a very bad, cryptocurrency had a very bad year in 2018 and I think 19, but we're seeing a bit of a resurgence. I'm not in crypto yet, but I'm going to get in there in May finally. Yeah, I'm going to get into crypto in May, just as part of me trying to rebalance my portfolio. All right, so we're also expecting another guest just to give us a little bit of outlook of what 2020 would look like in the next few months. And when I say 2020, I mean this quarter, just to give a little bit of an insight. And I mean, he's a renowned economist, one of the young, bright economists in Nigeria now. So he's going to be here very soon. And once he's here, I'll let you know. For now, ready to take your questions. I'm going to hand over the mic to Adetayo.
Thank you so much, Ugo and Yele, for your very insightful presentations. And I'm sure everyone in the audience has learned one or two things. Please, if you have questions, now is the time to drop them if you have not dropped them yet. This question goes to hold on. This question goes to Yele. He said, can you see BTC or ETH to hedge against the dollar and also use it to move cash out of the country? Do you see a use case here?
So I think the way I think about crypto assets is they're usually an uncorrelated asset from the rest of the market. It doesn't mean that they're immune from sort of short-term moves, right? So in March, and when the rest of pretty much every single asset class was like suffering, cryptos definitely suffered as well. But we've seen very, very strong resurgence from like some of these assets. BNB was $6 in March and is now trading at $17. Bitcoin was $3,700 and is now trading at about almost $9,000 today. So I think like they're definitely, I've kind of shown stats that go back 4 or 5 years, and you can go as far back as 10 years. So I think it's definitely a hedge against pretty much any asset class, whether that is like stocks or forex or bonds or anything like that. And then in terms of I think the second question was like about remittances. We've definitely seen sort of like use cases for digital assets as a remittance gateway. The big difference is for up until the invention of Bitcoin, US dollar was the only intermediary currency that one person, at least one person in the world, in any country in the world, will accept. Today, Bitcoin is sort of like the other currency that allows you to do that. So we're seeing a lot of traction in terms of people using Bitcoin to move money into the country, and sort of almost like an alternative or parallel settlement currency for the world. So yes.
Okay, thank you so much, Yele. The second question for you is, can we buy crypto with USD via domiciliary accounts instead of Naira?
So I think that's going to be a little bit tough. just because I'm just thinking about sort of like what particular platforms that you could use to support that would sort of accept USD. But I mean, I think it's doable, but it will probably be like a, VIP type relationship with whatever platform you want to buy from.
Okay, thank you so much, Yele. Final question I'll take on cryptocurrencies. I missed an opportunity to buy Bitcoin at 5,000 US dollars. Any chance we may see a reduction soon? I like to go in on the low.
Yeah, so because of time, I wasn't able to kind of like show some technical analysis, but what I would just say is if you could put up a chart, look at the daily chart and just wait until the price of Bitcoin drops below the 99-day moving average. And then that's probably a good time to buy. So the beauty about what we're trying to build is we want to make it very easy for people to, invest in not just crypto, but in other asset classes as well. But, I think there will definitely be an opportunity to buy Bitcoin, at around sort of like $6,000 over the next couple of months. And yeah, my biggest lesson from March was to make sure I have a lot of cash so that when there's a dip, I can take advantage of that opportunity. So I think you're playing smart by, waiting for the price to be a little bit lower. Or what I would say is maybe buy 20-30% and then hope that the price goes low at some point so you can buy the dip.
Okay, thank you so much, Yele. There are a lot of questions for you on cryptocurrency. Maybe you might answer some of them by text. This next question goes to Ugo. Hi, Ugo. Thanks for the insightful presentation. Is there a way to know the rates offered by the USD mutual funds options you suggested for me?
Good question. So if you go to the DMO website today, they often publish rates for Euro bonds. But I would suggest that, okay, yeah, you can also go to the FMDQ OTC website. You'd always see daily rates as well. But I would suggest that you go to your broker, right? So go to any of these brokers. You can always ask them for rates, and then be rest assured that they're going to give you what those rates are. For any given day. This rate changes, and sometimes it depends on who is selling to you, right? So it's just like share prices. Share prices, depends on who's selling to you, even though what they show you at the end of the day is the closing price for the day. But rates for, Euro bonds always changes as well.
The next question is, what is the difference between coupon and offer percentage for the bond offerings?
Okay, so that's kind of technical though. But the coupon rate is just the original rate that a bond issuer would always pay for the price of a bond, until maturity. So, for example, if you're going to be selling a bond at say 10% coupon rate, you remember that in Nigeria bonds, dollar bonds are, the minimum denomination is $100. So it means that they're going to pay $10. Every year for that bond. So that $10 is basically the coupon rate. Now, but the price that bonds are quoted for, they're usually yields plus the price. So if a bond, for example, is going for like $90, which means that is less than $100 that it was priced for. So that differential, you got to add it to the yield. So the yield changes because it means that you're getting $10 on a $90 price bond instead of $10 on a $100 price bond. So that means your yield is slightly higher. So you got to add the capital appreciation as well, and then the number of months or years left to maturity of that. But a little bit complicated. You might want to read a little bit more on it, but that's just it in a nutshell. And that's how they calculate the yield. So at the end of the day, if they tell you that your yield, the bond yield, like you have here now, right? So let's see if I can go to the corporate. Okay, so let's see here. If they tell you that this bond yield is 11% or say 13.4%, this is the coupon. This is how much the bond was originally, the yield was originally priced. But if you buy this bond and hold it to maturity, right, this is what you would have, you would have earned, on the bond on an annual basis. So that's it in a nutshell.
Okay, question for you, Ugo. Which application can I install to start buying and selling Nigerian stocks in the short term?
I hope I heard you clearly. So if you're looking for
Hello?
applications, I heard that, Tyro. If you're looking for applications, I mean, like most stockbroking firms currently have their online stockbroking platform, right? They have this. But if you're asking me, which one I use, I use Meritrade. That's what I use mostly. I have no affiliations to Meritrade, but I use them. And then we also use wealth.ng. Nairametrics does have some kind of partnership with wealth.ng. Their own interface is kind of simple on a mobile phone. If you're a beginner, maybe you might want to try that, and then they can always accept very little money for you to trade if you're just trying it out for the first time. And then as you mature in your investments, you can now start to use a lot more sophisticated trading platforms. So, like Stanbic also has one, FCMB has as well. So a lot of them have their online stockbroking platform, because with online stockbroking platform, you actually don't need to visit any stockbroker, and it's very easy. Just visit their website, register. They'll probably ask you for things like your passport photographs. So if you have digital passport photographs, you can upload it there. They ask you for things like your international passport or driver's license. You upload it there. Where you might have a bit of difficulty is a utility bill. So if you have a utility bill that has your address, right, and then that's easy peasy. You just upload your address and that's all. So what I use most times is your driver's license. So most times your driver's license, you typically have your address in it. So if you have a driver's license, your address in it, just upload it to the platform and that's it. It's very easy these days. Within a day or 2 days, they give you your trading number. That's your CSCS number, or CHN as they call it, and then you can start trading right away.
Okay. So we have Wale in, and he's an Agro-tech expert.
Okay, all right. So let me introduce.
So there's a question for him.
Aditaro, could you hold on? Aditaro, I think you're.
No problem.
Hello, can you hear me? All right, so guys, as usual, typical Nairametrics style, we had this here as a surprise for you. Got somebody that I truly admire, and he's going to do a little bit of a closeout for us. Wale Okurumbui is one of the rising economists we have here in Nigeria. His views are followed not just locally, but a lot of foreign investors follow his views a lot. And I'm sure if you read Bloomberg a lot and even Nairametrics articles, you see us, quoting him a few times about his views on the economy. So he's going to come on board and just give us a little bit of 5 minutes outlook on what to expect for the economy. For a lot of you who are saying, this oil price is down, COVID-19, what's going to happen? Are we going to be safe? This exchange rate, IMF. So Wale is just going to sort of cap everything up for us and, make it simple. And then maybe if there's time, we can take 1 or 2 questions for Wale as well. So Wale, welcome to this webinar. Are you there? Can someone unmute Wale?
Hello?
Oh, Wale, great. Good to have you here.
Okay. Yeah, thank you for having me.
Hear you now. So you've got the floor.
Okay. Yeah, I think just to summarize, I think the global, I think always good to always have a top-down approach when looking at trying to sort of form a view around where we think Nigeria will sort of go over the next few months. I think the important thing for us is because of how crude oil is important in our economy. I mean, 90% of exports is crude oil. Over 70% of government revenues is crude oil. Outlook for crude oil prices tends to be very key. Now, global crude oil markets I mean, the first 3 months of the year have been basically struggled with this crude oil battle between Saudi Arabia and Russia. Finally, there was a historic agreement. OPEC is going to cut about 10 million barrels, well, 9.7 million barrels, starting from May. So over the last 1 week, you've seen crude oil prices just start to a bit of recover, just reflecting the fact that, okay, maybe some guys are going to cut prices and cut output and try to rebalance the market generally. But even then, I think the fact still remains that because a lot of countries still remain under some form of lockdown, international travel, airlines aren't still flying across countries. Most countries will still remain in some form of lockdown. The view generally is that demand for crude oil will still remain very weak. And so even though OPEC is going to cut somewhere between 10 million up to potentially could cut up to 10 million barrels per day, the drop you're seeing on the demand is probably anywhere above 20 million barrels per day. So maybe it won't be enough. So I think we may not see oil prices go back to above 50, more likely stay 20, 30, maybe $40 over the next few months until the world is able to get past COVID and people are able to fly again and normal activities are able to resume. What this means is that for Nigeria, government revenues will remain under pressure, FX reserves will remain under pressure. However, we've got some temporary relief. The IMF has decided to give us about $3.4 billion. If we're able to get some dollars from the World Bank as well as from AFDB and from some of the other things, maybe that may be able to help us patch through over the year. The government is looking to get anywhere between 6.6 or approximately $7 billion. So if they're able to get most of that money in and they borrow the rest locally, then at least they'll be able to at least carry about implementing their budget for 2020. But for the economy as a whole, I think this year we've had 1 month whereby most people aren't doing anything. We had a lockdown. So generally, I think the view generally is that Nigeria will go into some form of recession, maybe in the next 2 quarters, Q2 and Q3, and then we come out maybe in Q4. During that period, they're going to see a lot of companies struggle with revenues. A lot of companies will have to adjust their business models. And so you're already seeing some of that. Companies are saying things like they need to reduce salaries, they need to lay off workers or rationalize their workforce. I think those are things that we'll have to get used to just over this year. Maybe next year, as the world economy recovers and generally as things pick up, we're lucky and we get a pickup in wider economic activities. Because the economy is not going to do very well, it's natural to expect that the stock market too will also, a lot of companies in the stock market will struggle. If you look at the Q1 numbers that are generally come out, most has been generally weak. I think that's the pattern you sort of see. Under COVID, in terms of interest rates may have to stay subdued. The central bank is going to try and generally all over the world, all central banks are trying to sort of push interest rates lower, just as a way of coping with the whole issue. Nigeria may likely tilt towards that as well, just as a way of supporting the entire economy. The central bank may sort of move towards an accommodative stance. But would this mean we see interest rates as low as single digits? Probably not, because the central bank has devalued the currency and they also still have their eyes on trying to sort of keep Naira stable. So that will mean at least, even though they try to push rates lower, there's a limit to how low that can get. I think overall, general views this year, the IMF says this is like the worst financial crisis we're seeing going back to the Great Depression. I think that's also what I think we're also going to see in Nigeria as well. It's going to be the worst economic crisis we've probably seen. We're hit on 2 sides, lower prices, COVID, and that's also going to weigh in asset prices. Optimism is to look out for companies that are positioned to benefit from this, like telecoms. MTN, I was on a call, and MTN said they are seeing a pickup in data consumption by Nigerians, and I think perhaps that's the telecoms companies are more likely companies that you see will sort of benefit from that. The healthcare sector as well, because now they're going to receive all the attention in the world, also in Nigeria as well. A lot of money is going to go into the healthcare sector. So that's potentially a sector that will benefit from COVID. Most other sectors, however, would generally struggle. Technology companies would also do well as well. I think generally anything that has to do with supporting the press of remote working and things like that would generally do well in this kind of environment. Most other sectors, I think, will struggle with the fact that we are moving from a world where people are used to physical activities to one where everything is done online. So as that transition goes through, I think the price of going through that transition and the fact that we have lower prices just means most other sectors in the economy will struggle. I think that's all. If you have any questions, yeah, I can shoot some.
Thank you so much. Okay.
Go ahead, Aditara. Go ahead.
Yeah, thank you so much, Wale. You have a few questions for you here. For Agric Invest, do you know Green Eagle's Agric Solutions? They are offering 40% in 6 months. They stated they are fully insured by Royal Exchange, and when I contacted someone I know in Royal, she said it is their crops that are insured. What do you think?
So this agro-tech, I mean, so what you need to understand is your investment is not what's insured. It's their own, the crops that they invest in. So if anything happens between the crops and the investment company, I guess that's the result. Again, with these agro-tech companies, there's a whole lot of push for SEC to try and come with some form of recognition or some form of licensing. I think once that's done, to a lot of people get greater understanding and transparency around how these businesses work. For now, I can't really comment on individual cases there because I haven't read the prospectus. What I would advise is you as always, anytime you receive such requests, try and read the prospectus, understand who the companies are, who the counterparties are, just get a sense as to what their process is, because it's during these periods that a lot of people would also sort of, let's not be naive to think that agri guys aren't going to be hit. They're also going to take a hit because you have a lot of lockdown. People can't move things across. What if something happens to the farms and farmers are not able to produce the goods and things like that? There's all kinds of risk going in between. So I would say this kind of environment, one needs to be very careful about. I think the focus in this environment is return of capital and less likely on return on capital, because you're not so sure. A counterparty might seem strong, and then two days later, the same counterparty is struggling for air, essentially. So I would say more caution in this environment.
Okay, thank you so much. I'm just going to take one question each. The last questions from Ugo for Ugo and Yele. The question for Ugo is: given the current COVID-19 situation and low oil prices, what meant a good time to buy Euro bonds, i.e., now or after the recovery? P.S. I've never bought Euro bonds before.
No, why do you want to wait till after the recovery? Now is the best time to buy Euro bonds if you have the money, though. So I would suggest that, I mean, you do that now and not, after the recovery. But you know what? You can even do it still after the recovery. Like, you don't stop. Remember what I'm preaching. What I'm basically saying is that, look, have a portfolio that is diversified. I mean, Wale always says that all the time as well. So make sure that you don't have just like a one-sided portfolio. So you got to also remember that it's very likely that there might be another round of devaluation, right? That's what some economists have been saying. So if there's going to be another round of devaluation, then you also want to make sure that you have some of your money in Euro bonds now, because if you have your money in Euro bonds now, then it's immune, to the negative effects of devaluation. So I would say do it now if you can.
Okay, thank you so much, Ugo. The next question and last question for Yele is: are there sites, books, platforms to learn more about cryptocurrency? From
Yeah, so there are two books I recommend. One is called Digital Gold. It's a good sort of like ideological on-ramp to understand more about crypto. Another one is Cryptoassets. Again, it's sort of like using traditional financial methods to try to understand how Bitcoin derives its value, which can be summarized in sort of simple supply and demand in economics like any other commodity. Websites, I would recommend Binance.Vision. It's basically a website that covers, anything from beginner to more advanced topics on Bitcoin and cryptocurrencies. And then also just be on the lookout on Twitter. We're launching a learning community for anyone who's interested in learning more about investing safely in Bitcoin and USD stablecoins.
Thank you so much, Yele. Ugo has a presentation just before we wrap it all up. Hello, Ugo.
All right. Thank you very much, Aditaro. So for those who, just hold on a little bit. If you, I mean, for those who typically ask, you know, what stocks to invest in, you can always sign up to our premium stock select newsletter. It's pretty easy. If you go to the website now, just click on, you see the banner there, just click on it. And then we'd always give you, you know, at least 2 stock recommendations monthly, buy, sell, or hold, you know, market intelligence. I mean, these are, you know, very good recommendations, not just from me, but from, you know, a lot of my friends who invest, you know, in stocks and in markets in general. I'm going to be editing this newsletter myself. So, I mean, you rest assured that the content there, it's going to be well researched. It's going to cost you a little bit of money, but we're doing a promo offer now at 2,000, you know, 500 Naira per subscription. And that's going to be, you know, for just the first, you know, 30 for the first 3 months as well. But the first 30 subscribers to this webinar, you know, will get on free. So you get 3 months free access to our newsletter. But subsequently, for any other person who wants to subscribe, it's just 2,500 Naira monthly to subscribe to our newsletter. It might go up, you never know. So the earlier you subscribe, the better. So thanks, Adetayo, for having me. I'm signing out.
Thank you so much, Ugo. Thank you so much, Yele, Bademosi, and Wale for coming in for the Nairametrics webinar, Investing Options for the month of May. If you want to reach out to Yele, please send an email to yb@bundle.africa.com, because I saw that there were a lot of yb@bundle.africa. I saw that there were a lot of cryptocurrency questions. If you want to reach out to the Nairametrics team, you just reach out to outreach@nairametrics.com. Wale, do you mind sharing if for people who want to find out more about Agro-tech and, you know, the economic environment in general, how can they reach you, sir?
They can reach me by, you can reach me through you guys.
Okay. Yeah. Okay, send an email to nairametrics.com, outreach@nairametrics.com, if you want to reach out to Wale. So thank you so much for coming into this session. I know all of you learned a lot of things, and it was a very insightful session. And so we look forward to having you next month. Have a nice evening and stay safe. Thank you.